Namaskar, friends. India is rapidly becoming a surveillance first nation, and leading this revolution is Aditya Infotech Limited. With its IPO hitting the market, the big question is, should retail investors place their bets on this security distribution giant? Let's break it down in detail. Aditya Infotech Limited is India's largest value-added distributor of video surveillance products. Its biggest strength? It is the exclusive distribution partner for Hikvision, the world's number one CCTV brand. Aditya Infotech operates through a pure play B2B model, supplying cameras, recorders, alarms, and access control systems to integrators, resellers, and corporates across India. In fact, over 91% of its revenue comes from Hikvision products alone. With over 9,000 plus channel partners and more than 100 of branch offices, Aditya Infotech has built a high volume, low capex distribution business that efficiently caters to India's fast expanding security needs. The Indian video surveillance industry is witnessing explosive growth, driven by smart city projects, school safety rules, and increasing urban security needs. The total addressable market for surveillance and security systems in India is estimated at over 16,000 crore, with a projected CAGR of around 20% over the next 5 years. Government initiatives, infrastructure expansion, and private sector adoption are all fueling the demand, and Aditya Infotech is well positioned to ride this wave. In a competitive landscape, Aditya Infotech clearly stands tall, but let's understand how it compares. Its biggest rival is CP Plus, which sells its own branded CCTV systems. Others like Zycom, Matrix, Honeywell, and Bosch serve a more niche or enterprise customer. What makes Aditya Infotech stand out? It is the largest surveillance distributor in India. It has an exclusive tie-up with Hikvision. It runs on a lean asset-light model that generates excellent margins and cash flows. But it's not risk-free. Over 91% of revenues come from a single principal, Hikvision. Hikvision, also being a Chinese brand, any geopolitical or regulatory headwinds could disrupt operations. Aditya Infotech doesn't own a customer facing brand, so it lacks visibility compared to CP Plus. Financially, Aditya Infotech is rock solid. Between FY22 and 24, revenues grew from 3,600 crores to 5,100 crore, a CAGR of 18.2%. EBITDA margins improved to 6.75%. PAT margin rose to 4%. Return on capital employed is an impressive 51%. Return on equity stands at 38.37%. Debt to equity is a comfortable 0.65 times. Free cash flow is strong and improving. In short, Aditya Infotech is profitable, efficient, and growing, a rare combination. The IPO price band for Aditya Infotech is rupees 640 to 675 per share. At the upper end, it's valued at a PE of 31.6 times, EV to EBITDA of 22 times, and a price to book of 11.69 times. Compared to its peers, it is slightly expensive, but justified by superior return ratios and dominant market position. The grey market premium as on today is around 101 rupees, indicating an expected listing price of 776, which is a 15% upside. The total IPO size is 1300 crores. Of this 1300 crores, 500 crore is a fresh issue, and these proceeds will be used for working capital, infra, and tech upgrades. The balance 800 crores is an offer for sale where the promoters get an exit. Aditya Infotech is promoted by the Khemka family, which will continue to hold around 66% stake post IPO, which shows a long term commitment. The board includes independent directors, and no material litigations or governance red flags have been flagged in the DHRP. Let's sum it up. Why Aditya Infotech looks promising. It is a market leader in a high growth segment. It has solid financials with strong return on capital employed as well as cash flows. It has a deep distribution network and exclusive original equipment manufacturing tie-ups. It has strong institutional backing and a grey market sentiment. However, the risks to watch are overdependence on one brand, Hikvision, regulatory exposure due to the Chinese origin, and lack of direct consumer brand recognition. Overall, our verdict would be to subscribe for listing gains and long-term potential. But investors need to monitor geopolitical risks very closely. Thank you for watching. For more IPO breakdowns and equity insights, don't forget to like, share, and subscribe. Thank you.